Hello and welcome to this week's Market Matters weekly video update for Thursday, the 6th of October. I'm Harry Watt, joined by James Gerrish. We're going to talk about performance to start. It was a very interesting September, to say the least, the last month of the first quarter of the new financial year. James, just run us through portfolio performance through September.
Yeah, it was one for the ages, September. So to give you some context around what the market did, the ASX 200 in accumulation terms was down 6.2%. The small ords was down about a bit over 11%. Over in the US, it was worse. So the S&P was down 9.3% for the month. So some carnage out there in terms of what played out for stocks. To give you some context around what the Market Matters portfolios did, our flagship growth portfolio was down 5.37%, so slightly better than the market. The income portfolio fell 3.22%. The emerging companies was down 9.2%, which is obviously a big number, but less than what the small ords did. International equities fell 2.14%. Obviously, weakness in the Aussie dollar helped that, but also some strong relative stock picks also played into that portfolio, and the ETF portfolio was down about 2.3%. So obviously red right across the board, Harry. Not a great month of performance. We've bounced back really strongly at the start of September thus far. Obviously the market's been pretty strong over the last couple of days, but relatively speaking, those numbers are not too bad.
Obviously, with a bit of volatility comes a few opportunities. We are more on the active side of things when it comes to managing those portfolios. James, how did those portfolios evolve through the month of September?
Yeah, so I guess we were fortunate when the market ran up the prior month, got to nearly 7,200 from memory. We started to increase some cash. So, our flagship growth portfolio got up to about 14% cash. Income portfolio was about 17% cash at the peak. So, into the weakness, we could use, deploy some of those funds. So, and we targeted specific areas. So, obviously, for those who have read the reports on a regular basis, you'd know how important interest rates are in our way of thinking around the macroeconomic backdrop. Obviously, we thought, what played out in the UK, which are, some really interesting, fascinating, strange moves in what they're doing over there, but ultimately it led to a big appreciation, a further appreciation in bond yields. We thought that sort of that artificial move higher in interest rates, courtesy of the UK, was likely to be a top in bond yields, and we navigated. We moved our portfolios more up the risk spectrum as a consequence of that, and we actually focused on technology in the growth portfolio, and we income portfolio and emerging companies portfolio on the international equities portfolio took on more risk into weakness. So that's, I guess, what underpins some of the strong relative returns across the suite of portfolios, albeit they're all negative, which I don't want to stand away from.
In terms of that macro backdrop you talked about, we've seen the RBA come out this last week and really change tack there. Are we seeing sort of this inflection point heading into Christmas, the back end of the year, where we might see a little bit of those headwinds removed from the equity market from here?
Yeah, I think you've, touching on my points before, I think there was, there's growing evidence to say that interest rates may have peaked, and we've seen a meaningful pivot from central banks, led by the Aussie, the RBA here in Australia. So obviously that they raised by 25 bips. The market consensus was 50. We thought they should have done 25, so they've done as we thought or hoped they would. There's a lag time between how economic, the tightening of monetary policy and the impact that has on households, on spending, on inflation, etc. So, look, the big number is going to come out of the US on the 13th of August. So they've got their CPI print over in the US on the 13th. If we can see inflation start to taper off, so that feeds into some of the weaker than expected economic data we're seeing out of the US in recent weeks, I suggest, then the market will rally. If it doesn't, so if we get a number greater than 8.1%, the market will fixate itself on this rampant inflation and the moves that central banks will need to make to curtail that, and then equities will go lower as a consequence of that. So 13th is a big sort of data print that we all should be focusing on in the next week or so.
Across the board, we're pretty tight on cash at the moment. We're reasonably well fully invested in each of the portfolios, James. How are we looking at that positioning into Christmas? I know we've written about how bullish we are, but obviously there's that risk around that CPI print in the US, James.
Yeah, there is. You've got to evolve your thinking. So we don't sit here and be contrarians for contrarian's sake. I mean, I think we spent a lot of time looking at the macroeconomic influences that ultimately play into valuations of different sectors on the market and different stocks on the market, and that's how we've come to the position of now seeing really strong risk reward with markets at lows. The Aussie market got down to 6,400, just above on the long week of the Monday, the long weekend when most of us were not in the office, and then has rallied 6.2%. Coming out of that low. So you're right, we're fully invested. We're expecting and positioned for a strong move into Christmas, seasonally strong period. There's a bunch of reasons why we think that, but ultimately we've got to keep our eyes open across our portfolios and across our market views. So when data changes, we'll change our stance as a consequence of that. But for now, I expect we'll be pretty quiet if the market plays out how we're expecting and how we're positioned for at the moment, Harry. So hopefully, fingers crossed, the market can run hard and reward us with some really strong performance going into the back end of the year.
Yeah, still playing eyes up footy, James.
So the season's over, mate. The season's over.
That's all we've got time for. Thanks for joining us. Hope you got a few takeaways from that video. And as always, keep an eye on those Market Matters reports.